you. Can you hear me loud and clear? If yes, give me a thumbs up or put an LNC for me. Good morning to all of you. Yep, my throat is better. This is very good for the throat. This one, the honey, lemon, and peppermint, very good. Every time, whenever I have a sore throat, I will drink this, and I can almost say this almost instantly. It will be good. Okay. All right, guys. Once again, thank you. Good morning to all of you. Thank you for waiting. Now, obviously, itself, right? Today, the time we started was late because I was preparing a lot of information for all of you. Okay. Right, mind you, Judy, it's been quite a while. Last time I see you, right, in person. Okay, so hope that I can see you soon, yeah? Okay. All right, let me just do some sharing first to my friends and the other groups that are waiting for it. Okay, here we go. Okay, guys, happy Wednesday. Happy Wednesday. Well, Leslie, Terry. All right, Lion. Okay, let's go with our this morning MAO content. Yeah, let me just get myself up and ready. Here we go. Okay. Right, Sharif, good morning to you. Nice. Ladies and gentlemen. Okay, guys, good morning to once again. Today is the 25th of May, Wednesday. All right. Now, the caption probably brought you here today. Is the US Dow Jones Index, industrial index, yeah, really heading towards the 29,563 level? Now, let me ask you this question, okay, guys. Let's be upfront. Let's be candid here also, okay? How many of you think that the Dow Jones is really going towards the 29,563 level? If you think that it's going, key the word going, G-O-I-N-G. If you think it's not going, just put the word not, N-O-T. All right, please, there's 46 of you right now. And meanwhile, for those people who are still, have friends who trades in the market, kindly ask them to join us today, because today's MAO, the content itself is definitely very good stuff, okay? You really will want them to come in to enjoy this thing, because they will likely be thanking you after that itself, okay? No kidding, right? You know that I don't kid her stuff. All right, it's not for marketing campaign. Quickly now, get your friend to come in and join us this morning, okay? They'll definitely thank you after this event, okay? Definitely. Okay, come quickly get our friends in right now. Yep, okay? And then come in right now to enjoy this thing here itself. Okay. All right, so let's just look at the comments right now. Okay, the comments saying, okay. So we have Leslie say going, Anthony say going, Lion say going on the way, Brian say going and heading, Susan say going, Wei Lun say no, okay. This Chongming say going, Damien say no, okay. Joe Judy say no, okay, not going, yeah. Michael say going and heading, Chukit say no, then Jason say going, and Kelly haven't commented. Okay, all right, now let me just take a quick picture on this right now. Okay, all right. So basically, we have about 70% of you guys say going, okay, and 30% say not going. All right. So I will have my own verdict later, but I will share with you what some of the boys are saying. Okay, so let's look at it. Now today, definitely you can see, you can recognize the face. We have Michael Burry, we have Bill Eichmann, we have George Soros. Okay, so we will be covering the three of their views in the market, and we see what is it in store for us. Okay, so let's look at the market and we see together. All right, so disclaimer apply as usual, my friends. Disclaimer, disclaimer, disclaimer. All right, whatever I share is my personal view. End of the day, you make your own call, you make your own decision, and you trade according to your own plan. Okay, this is very, 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 very important. Okay, all right, so that is it. Now, of course, let's start with the joke of the day as usual. All right, so definitely now the key thing is this: inflation is still going to hit us very big. Now, I think you should know right now today, this is going everywhere. Okay, it's hitting everywhere right now. Okay, all right. Remember, Prime Minister Lee Hsien Loong came in and talked about inflation 2 days ago, and of course, yesterday we saw something exploded in a way whereby suddenly you notice that all the hawker center in Singapore, right? Everybody is queuing for chicken rice. I was shocked. My area, the Tampines area, oh my goodness, all the queue, my goodness, all came from the chicken rice stall. Oh my God. Okay. So definitely it's coming. All right. But of course, to wrap it a little bit again, all right, we do know that Jim Cramer is still talking about the market being bullish and feel that the bull is within a bear. Okay. So this is Jim Cramer basically saying that. And of course, this is just a joke here as well that Jim Cramer said the war is not over. And then after that, a potential hazardous asteroid approaching Earth. This is actually real. The asteroid really came near to Earth, but luckily our so-called when Mother Earth was moving, the asteroid missed us. Okay. So anyway, this is just for fun, trying to rub Jim Cramer. But point is this: everybody is now using Jim Cramer as a form of guidance here itself. And of course, that's why I tell you this: don't always look at what you see on internet. Sometimes it can be just a joke. All right, joke means what? It's not that it's a joke, but it's a joke because right, it may not be true. So apparently now this morning I saw this very, very funny. All right, apparently BBC, right, it's such a big company corporation, right, actually has to apologize because apparently apprentice actually key the learning behind the scene typing, which I know that it does happen. But of course, I'm quite sure this the trainee may not be a Man U fan, but he or she wrote it and said Man U are rubbish. And this is real. This is actually captured. This is really captured, okay? And it's so funny. It's like, oh, okay. So guys, when you look at things on internet, even this MAO right now, right? Don't really take anything for face value. Do your own research, okay? Don't ever just see on internet, say, oh, I saw on internet, it must be real. Sometimes it may not be, okay? May not be at all. All right, Kelly, you are saying that yesterday, you say going, but you say that the Dow hit 32,000. Well, that's my point. And that's the thing I've been saying. I say that the market itself, right, will not actually hit down to 31,000, 29,532 so early. I say that there will be a lot of bounce. And I'll cover this later on. So stick with me and you hear me out, okay? Yes, Sharif. Yes, indeed. Bill Ayman was very pissed yesterday. Yes, indeed. Later on, if you've got time, just watch the video. It's quite interesting. Okay. Now, at the moment now, the fear and greed index is still staying at 12. Now, this is quite a while already. The last time we see the fear and greed index staying at 12 so long, it's been a while. In fact, itself, right, not seen before. So let's take a look in terms of numbers here and some charts, okay? Now, you can see that on average, yeah, okay, let's bring it in. Right, this is the average of the fear and greed index, which is about 18. But when 14, sorry, 15 before it bounced up. All right, so this was when it is here. Then after that, there's one more bounce here. Now, usually when the market, it will touch and go, but this time around, the market is actually hovering this for quite a while. So the question comes in, why is it hovering so long? Because the last time when this all happened, Mr. Federal Reserve, Jerome Powell and friends were all around. So when they are not around, we have a problem, guys. When they are not around, we have a problem. So when Jerome Powell and friends were around itself, right, everybody was able to expect Jerome Powell and friends to come in and save the day. But because now they are not around, that causes the problem. So the thing is this, will they be coming to help? The answer is no. In fact, just a few more days later, we're going to see this next FOMC meeting. And naturally, we do expect the Federal Reserve to actually hike the interest rate by 50 basis points. But the very interesting is this Bostic and Ballot came in and they had a different view. Right? That's very interesting because Boller was all the way pretty hawkish. But apparently yesterday when he come and speak, right, he was a bit dovish. So that creates two side camp. All right, I'll cover this more later. All right, again, once again, you know, my MAO is always giving you the most latest update. I don't tell you about technical analysis. I don't tell you MACD. I don't tell you stochastic. I tell you exactly what you need to know. And of course, this information, when you have it itself, right, will give you a lot of free room to prepare yourself before the real things happen. Yep. Okay. So that's the reason why I'm sure you guys like the MAO content, right? Okay. So the thing is this: yesterday, the new home sales was a very big problem. Okay. Now remember, I shared with you, right? I expected new home sales to be down. I already told you that. Okay. But the thing is this: the previous number was 709. And the forecast was 750. So the market was actually looking at an increment of new home sales. But I was pretty confident, and I said it last week, I believe that the number will be down instead. And my goodness, the number was not down a little bit. It's down by 100 over 1,000 new homes sales not there. Means it's much lower than expected. So what happened? So immediately it's all right. We saw the yield coming off a little bit. The dollar came down a little bit. So all these create the cracks in the economy, and that actually tells us a lot. So tonight, Jerome Powell at 12:20 tonight, okay, 12:20 a.m. Will be speaking. And of course, before that as well, we will have the core durable goods order, which the market now is actually looking at a lower number. So think about this. They are now looking at a lower number, and what do you expect? Okay, so of course, some conspiracy theory will say, okay, this side now is a lower number, so you go to higher number. Well, it's all possible. But another way is that they may just stun the market with a high number. But if you want to ask me, it's all right, I'm going to give you a low number. Because I think that the number can't be any greater at that. I don't think so. So I'm going to give you a lower number for today. Okay. Now, crude oil inventories. Now, we can see that the crude oil inventories was minus 3.3 million previously. Minus means lesser supply. And this time around, they expect the inventories will be slightly better. Now, I don't think so. I think they'll be at least minus 2 million. This is my personal view. Let's see whether I'll be right today. Let's see if I can try to jackpot. Now, why is the reason? Because it's very clear demand and supply is definitely there. A problem. All right, the demand is high, but the supply isn't there. So that's the reason why I felt that the crude oil inventories won't be good, and that might actually push the crude oil price higher. And of course, naturally, the crude price go higher. What do you expect to see? Well, definitely you have inflation again, and it's going to be in a spiral. All right, so that is my view. Okay, my view right now. So guys, as you are hearing this, if you enjoy what you hear now and you think that this guy makes some sense here, quickly get your friends to come in so that they can actually listen to me when I cover on the George Soros, Bill Ackman side itself. Okay. Meanwhile, I'm trying to go online and see what my stuff here is. So, okay, just give me a moment. There we go. Okay. All right. So that's the thing here. Then, of course, on this Thursday, we have the FOMC meeting minutes, which are expected to be a hawkish minutes. Okay, hawkish minute. Yeah. Then before that as well. Before that we will have we have the GDP Q on Q data, and of course we expect the number to be the same. Okay. All right. So FYI, as I said again, the durable goods order went up last time. I don't think it'll be higher. I believe it'll come down again, and that will spook the market a little bit. Okay. All right. Okay, so the thing is this, but the US stock market yesterday was brilliant, okay? Initially, it was down by almost 400 points at the start of the day, okay? And it was where we profited at 31,411. Now, how many of you have profited at 31,411 last night? How many of you? How many of you profited at 31,411? That means that you guys went into long in the market and you got yourself profited. Right, if you have profited, please key the word there. So I want to see how many of you profited. Wow, great, great, great. The numbers are coming in. Excellent. Okay, wow, okay. Right. That's very good. Okay. Wow. Okay. Well done. Well done, Anthony. Well done, Kelly. Well done, Susan. Well done, Leslie, Brian. Oh, Sharif, you bought it from there instead. Oh, very good. Okay, guys. So you can see that, right? Our students make money, and it's very obvious. Okay. Now we basically were short. We short the market. Okay. And I tell my student that at 31,411, buy back 1/3 of their position first. I say that this is a very important step to do. And truth be told, after the market really hit this level, the market recovered. And very good is that we actually put a trailing stop right at 31,650, and it trailed us off. Then after that itself, right, look at it, after midnight, oh my goodness, the market just rallied all the way. So is it the sign of the boys coming in to buy? Or is it a sign that the market is just preparing for a bigger sell-off? All right, so this is where it gets very interesting here itself. Okay, so everybody now has to think about it and see what is going on right now, okay? And I'll share with you more in detail shortly, all right? Just a few minutes. Wow, there's so many good signs coming in. I'm so happy for you guys. You guys have made money from the market. End of the day, you see, you guys really make me very proud of you. Okay, let's continue, yeah? Okay. So let's just look at what happened first. So the first thing that dragged the market down was Snap. The question is, how can a company called Snap, such a small company, create this problem here? Now, you must understand, it's not that Snap that is a company that created downside. It's because it's just a catalyst. Because everybody understands now is that now with pandemic over, people going back to work, right? So advertisement goes down. Number two, because the economy is not doing that well, inflation is a problem. So again, advertisement goes down. So when company like this having advertisement fees and stuff going downwards itself, right? All the upsell figures is no longer there, and that's the reason why the markets have sell. So of course there will be, if the smaller company gets a problem, then we all can think that the big company also may highly have the same problem. So because of all these things, is like a repercussion of stuff, it causes the domino effect. Okay, it causes domino effect. So one thing to know is this. Okay, we all know that, right? The Nasdaq now is still coming down. Now, 8 weeks ago, I've been calling for sell in the Nasdaq. I keep on reminding people, say that, look, once the Federal Reserve pull the handbrake, the Nasdaq will fall. So, but the thing is this, at the same time, it's right, a lot of people was going different direction. They felt that as long as the technology companies are doing well, they have the earnings, it should be good. But you see, the world don't work that way, because I have shown you many times, right, the chart of the Nasdaq, S&P 500, and the Dow Jones, the way it moves, and the money that is involved by the Federal Reserve, they move in tandem. So which means that, right, if let's say the money with supply is taken away from the chart, logically speaking, the chart will collapse. And truth be told, it happened. Now, because of the very bad, the housing numbers, right, the 10-year yield actually moved down lower. In fact, it went down to 2.73. Let me bring to you right now immediately so they can see this right now. Okay, let's bring it in. Okay, so the thing is this, I was expecting there would be some support at 2.85, okay? But it didn't really happen. So I was wrong there. It's also wrong, okay? When I'm wrong, I dare to admit, yeah, I thought it would stay there. But I did also tell you that, right, if it doesn't stay there, it will go to the moving average, because the last time the moving average was here. Okay, so now I'm going to put my bold statement here. Everybody listen up, okay? My very bold statement here. If, let's say, the 10-year yield touches the MA, all right, touches the MA and stay there and bounce, I'm telling you upfront, if this really happened, the Dow is going to 29,563. Okay, that means that, right, if you actually, if this yield actually move, all right, move upwards after the bounce, be very careful. Every day it goes up, right, the market will press towards 29,563. So the question will come in, right? What if it doesn't go there? What if we hang around there? What if the yield go down? Okay, now if the yield goes down, all right, the Dow Jones will likely maintain at 32,000 to 32,500. That means that if the yield actually do go down, that means that instead of going up, right, it goes down instead, right, 2.4, then the Dow will be trading around 32,500 area. Okay, so I give you two sides of the market right now. So you watch the yield very, 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 very closely, okay? Watch it very closely because that will be the main decider of this round. Okay. So both sides, you must take note of that. Yeah, very, very important. 32,005, I mean the yield. So now the yield is at 2.76, right? So let's watch. Okay. Now, is it possible for the yield to go down? It is possible if the economy is getting worse. It is possible. Yeah. Number two is both because right, people are buying into the bond market. That's why the yield is coming up. That means that right, there's a lot of money coming in the system and they're buying the bonds because they don't want to buy anything else. So actually, right, even if the yield goes down, right, the market may actually, the equity market may sell depending on how the market is doing it. But I can guarantee for sure, if the yield goes up, then definitely the Dow is going to go down to 29,563. Okay, this is very, 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 very crucial and important information. Yeah. So watch this very closely. All right. Hi Kai, good to see you all the way from Germany. Yeah. Okay. So the thing is this, we all saw that Amazon continued to fall. I told you Amazon is a sell. And of course, Apple also a sell. So basically, you can see right now, everything is coming up. The only saving grace yesterday was because of the bank shares. Bank shares collectively all went up yesterday, all went up. And the one that moved it itself, right, actually was JP Morgan. So the thing is this, the bank share was the one that saved the Dow Jones. You know, the Dow had went down lower. But of course, Bill Ackman, the fund manager, came in and says that, no, this is ridiculous. This will actually cause a bigger problem instead. I'll talk about him later. So in short itself, right, he still thinks that an aggressive monetary tightening is important, or you just let the stock market collapse. Okay, either one of them is needed. If not, you can't get your inflation coming down. Okay, so again, that's Bill Ackman. All right, so they're not too sure that he got short the market this time around. All right, so let's look at the TWB chart. So once in a while, I will show you TWB chart so they can learn from it, right? Okay, so first of all, let's take a look. Very clearly itself, right? Yesterday, the KSI was a red, but it's a downtick red. A downtick red means that the selling will be there, but it will be limited. So straight away with this information, I was telling students of mine, I said, look, the Dow Jones is going to go down, but at 31,411, they're supposed to buy back that position. So if they remember that itself, right, they will know that Cal said that. So what happened is when the Dow actually came down, it did break below 31,717 to the pivot 2, so the market slowed down further. Then it came on the MLP, it broke down further. But the thing is this, once it came back to almost to the starting point of the previous day market, it stopped there beautifully and then continued to recover from there. So again, there was somehow of some buying interest from the market. So let's take a look, okay? So first of all, the market was ding-donging, all right, over here. But the opening price is here. So once the market went below the opening price and also below pivot 2, no need to say that is a short. So we actually also shorted here, remember? And we shorted here all the way down. Then after it did rebound, but it couldn't test past it. You can see that the market just couldn't test past the pivot 2. This is a very classic sign that when the cash market opens, the market just collapsed all the way. And of course, we bought back at this very good price at 31,411 because that is the 85% level, which all of us know. And because of that, we bought back. And of course, after about 45 minutes later, the market bottomed out beautifully. And then after that, the market goes up. Now, when you try to go up, right, you notice you try to test it, but couldn't. But the moment it went through it, that's where the Dow shoot up all the way. So all this information is all made available in your TWB chart. Or you, as long as you're a TWB trader, right, you will actually have all this information. You just have to follow through. You don't need to think so much yourself. So it's pretty simple, right, as you can see over here. And this is what you need to do as a trader. Okay? All right, excellent. Okay, so with that understanding now, right, let's look at the gold market, shall we? Now, because of the dollar coming down, let's look at the dollar again. Now, the dollar, let's take a look. Okay, let's go. Okay. Now, yesterday, the dollar continued to drop lower. Now, same thing again, Capia. I thought that the market will stop at 103. Now, I really thought it would stop at 103 or 102, but in fact, it went lower. Now, again, the selling was because of the economy of the US market not doing that well, and that's the reason why the dollar coming down. So don't you notice something very incredible now? The dollar itself is not doing well because the economy is not doing well. But the economy is not doing well itself, but the stock market is going up. Does it make sense to you? So somehow it's all right, something is wrong somewhere. Unless you're telling me that because of the tightening policy that causes the new home sales to go down, hence therefore they achieve what they want. But the problem is this new home sales is like last 2 months data. right? We haven't even come to the point of QT yet, quantitative tightening. So how can you tell me that last 2 months this housing itself got any relevance to today's problem? So all I can say is this: to me, this is just it's just like basically, right, you know, you are wrong, but you deny it, and even though you know you are wrong, but you still think that you're right without feeling. So anyway, as I say, I'm a technical trader. I'm watching this very closely, which is the moving average. Now the moving average itself is about 101.50, around there for the dollar. So which means that, right, if the dollar hangs there, 3 things must do. Okay, if it hangs there and start to recover upwards instead, what must you do? Sell gold. Yes, you heard me correct. Sell gold. Okay, all right. Buy crude. Yes, as a hedge. Okay, and of course, if that happened to sell equities, sell stocks. Okay, as I said, if I dare to write it here, I'm not afraid for you to copy and send your friends. To me, is that if the dollar can maintain at the 101.50 level, it should be able to be pushed up again ahead of the current next FOMC meeting. And of course, when that happens, when the dollar strengthens, you can actually sell gold, buy some crude oil, sell stocks. And you can also basically, you can consider to do counters, you know, you can buy some FX, all right, that go opposite of the US dollar, okay? All right, against US dollar. You understand? Like euro and pound and stuff like that. You can try a little bit, but of course we know that currently now the UK is not doing that well. So all this information is something that you can consider, okay, guys? It's going to be important for you so that if really this happens, you will know what to do. All right, cool. All right, so watch out for the US dollar. I think that we are almost there. We are reaching there soon. All right, so let's look at what happened in the market. All right, so the market basically was just toying around here. And then after that, you can see the KSI jump. I mean, the boys came in to buy, and the market stabilized above pivot 2, and that's where you go in for buy. And after that, what happened? You notice that there's multiple green dots here. Now, it could be meaning the market will go down soon or it's going to shoot up. Okay, one way or another, you basically take note of that. But because the KSI is all the way green, it does make sense that to expect the market to go up instead, and which indeed the market really followed through. And of course, with the star there itself, the market couldn't stay up, the market pulled back. So the star and bomb I'll introduce to you as along the way, but more important thing is this is something that you can learn from me on this coming 28th of this May, where I will have my preview. All right, now we have more than 50 people have signed up. I expect to see 100 plus people by end of the day. Okay. All right, so that is the TWB chart to talk about the Dow Jones and the gold market. Now let's look at some global news right now. Now, the first of all, the Malaysia chicken ban. So apparently now, right, we have a problem. Okay, Singapore F&B outlets and importer are all bracing for this thing here. Apparently, right, Mr. Ma for the Poultry Merchant Association says that, right, because of the supply issue, they are going to basically do something drastic. They're going to halt export from 1st of June until the price of chicken supply actually stabilize. So of course that means that Singapore side will suddenly either have more frozen chicken, or maybe that you have the price much higher, or you just see it running out ASAP. All right. So basically, what happened is that since May 31st, they already know that they are having a bit of problem here itself, and because of that, the thing is this, like you'll be doing more frozen chicken than not. Yeah. So again, now the thing is this to show to you now, this is how the price shoot up recently. Okay. Now all along itself, right, the chicken price is somewhere around here, and that is usually probably during some festive season. But now you can see that the chicken price has shoot up all the way. Now it was an average price of maybe $3.49. But now we're talking about almost $5. Okay. Now, of course, we can say that it's penny wise, pound foolish, but it's a basic necessity. And you know that it's actually made available. So for us to go and see the price jumping so high, right, you just feel a little bit shortchanged, right? So of course, don't go hunting for chickens. I know that in some estates itself, right, there's some chickens. Don't go and hunt them, okay? They're all the compound chickens now, no much meat, okay? Leave them alone, okay? Leave them alone, okay? All right, so just wondering, is all right whether our Lee Hsien Loong actually knows something or not? Because 2 days ago, before the chicken rice thing happened, he came out and said that inflation become a very serious problem for the world if measures not taken. So just wondering, right, would there be more measures taken now with this thing ongoing? That's a very good question, yeah. Anyway, so traders, just take note of that. Okay. Now, of course, on a side note, there's something very untrivial, a very funny thing. I say it's funny because why? It's got no relevance to it, nothing at all. Just give me a minute. Something wrong with PowerPoint again. Just give me a while, yeah. Trying to source up. Okay. Something is wrong here. Wait, okay. Okay, anyway, sorry to keep you waiting. Now, that was a baseless, okay, baseless, yeah. Baseless conspiracy theory is brewing on China Twitter. All right, with social media user accusing the US of creating and leaking the monkeypox virus. What do you think, guys? Do you think that it was this US that created this monkeypox? Do you think so? If you think so, right, press 1. If you don't think so, press 2. For those who think so, press 1. For those who don't think so, press 2. Okay. Now, once again, it's all right. This is the baseless conspiracy theory and nothing at all. Yeah. Okay. So Susan say number 2, Judy say number 1, Hao Yong say number 1, Sean say number 1. 1 are people who think it is. Yeah. Brian say 1, Leslie say no clue. Kai say Bill Gates knew it in 2021. Alex Heng say 1, Louis number 1, Sharif, Kai say 2, Leslie Ha say Hugh say 2. Kelly Paul say 1, Chukia say 2, and Han Yu say 1. Oh, there's so many of you guys actually contributing. Thank you, guys. Jason say 2, Andrew say 1, Lee Kwok say 1, Dennis E, and David say 2. Okay, so it seems that, right, a lot of you guys are on the second side. It means that number 2, right? It means that you do not think that it come from you from this US. Okay. Anyway, it's just for fun trivia. Okay. All right, so apparently, okay, a baseless conspiracy theory among the origin of monkeypox is circulating on Chinese social media, and it's on Weibo. All right, so of course, all this is like ongoing. We've been seeing this on and off since COVID time until now, haven't been stopping. So they're saying that, right, to some comment or saying that this is ridiculous. Right, some people even say that this is an American terrorist organization. So anyway, we all know that, right, monkeypox causes boils and full body rashes, and it's detected in this US recently. And of course, it does kill, but the only thing is this: the so-called transmission is not so simple, not so easy. So it's apparently still containable. So according to this WHO, right, it say that although there are instances like this, but still can be safe. All right. So again, all these are things that they can really, whatever you read in the media itself, please be very careful. Anything can be fake. All right. Now, of course, while we're looking at monkeypox to put away, but we can actually get our Novavax COVID vaccine right now from Ong Yi Kang. So apparently now the Novavax, as you know, is one of the 2 non-messenger reborn nucleic okay, acid, okay, the mRNA. All right, so these are the 2. This is the one of them whereby you can actually utilize it, okay, to you don't use it for if you don't want to use mRNA. So it's all ready, and the place to get all this area. Okay, you can see that the joint testing and vaccination center Jurong East, this Pasir Ris, Kaki Bukit, Bishan, and Commonwealth. These are the areas that you can go to get your jab. Okay, all right. So this is something good for all of us. Okay. Right, so that one is all the global news. Let's look at something a little more to the market, shall we? Now, Santoli, the senior market correspondent, says that, right, Tuesday's slide, okay, which is yesterday, prevent the market from recovering the benefit of the DOW. Okay, I think referring to the NASDAQ, yeah? So what happened is this, we saw the market fleeting and then rebounding at a very fast rate. And of course, this is something that's not normal, very not normal. So that's why people are getting used to it that way. And of course, the thing is, the key point that everybody's looking at is still the S&P 500 and the 20% mark. So let me bring to you now, where is the 20% marker? One here. All right, guys, take a look here. It's pretty clear. Where is it? So this is the highest point for the S&P 500, 48.18 to 41.9 without CFD and cash market. So what happened is the market dropped all the way down to the 80% mark, which is known to be the bear territory. And very, very impressive. Every time it comes nearby, the market will just push it up for it. So the question comes in, everybody. Now, I want you to do yourself a favor. Take out your calculator right now. Okay? Take out your calculator right now. Now, the two numbers between the S&P 500, this is 40.96. This is 38.55. Okay? Now, you can see how accurate it is. Now, why don't you take these two numbers, add together. Let me take these two numbers, 40.96 add 38.55. Then after that, divide it by 2. Okay? Can you do me a favor? Can you do that right now? 40.96 plus 38.55, add them together, then divide by 2. Okay, divide it by 2. Okay, you get a number, right? The number is, thank you, this Allison, thank you, Michael, thank you, Nelson. The number is, okay, the number is 39.75, okay, 39.75. All right, of course, the exact number is 39.75, but we just basically truncate away the last decimal point, and then I'll do this for you guys. Okay, take a look, yeah, the magic here. Okay, change the number. And the number, I'm going to put in the number 39.75. Okay. All right. So what I'm doing now is this. I'm basically sharing with you how I use technical analysis to my favor. Is that we all know that the market now is using this 80% so ardently, right? It means that every time it comes there, the market always rebound. So to me, as a trader for 20 over years, I always start with this. Trends are made to fail. That means that, right, it's made for people to keep on using it. But the ultimate eventuality is that you're going to make it fail. And that's where the boys will basically go for the kill. So I know by saying this, it's going to be tough to answer that, but you can see now when I do this. See? When I do this, it's all right. It will become very easy to understand. Everybody take a look. Look at the chart right now. Take a look, yeah? You can see that, right? If I were to do this right now, you will see that a very powerful trend line that separates the bull and the bear. Can you see that? Very cool, right? Can you see that? Pretty cool stuff, yeah? Okay. And then what happened? What happened? Take a look, everybody, take a look. Okay, if you put the lines there, it's all right. You can actually see the very clear indication of the market. Right, I'm going to clean up the screen now. Okay, watch, huh? And I'm going to make it bigger. Okay, as big as I can. And then after that, I do this. Now, everybody, take a look. Everybody, take a look. What do you see now, yourself? Do you actually feel or see the so-called what do you call, technical line on it? So you can see what happened. Let me just show it to you the blank. Okay, so you can see that really brilliantly. Look at it. Look at how it stopped there. Very nice, right? It actually stopped there and then, you know, rebounded. But once it went below it itself, right, it came down very nicely. Okay, got the idea now? Okay. So when it crossed this line, it goes up to this point very nicely. Can you see that? Because this is the 85%, this is the 80%. So when it breaks below, it goes down to here very nicely. Okay, do you see the point now? Okay, so now the thing is this, 2 days ago, we are supposed to have it going up. But because of Snap that came out, the data was not so good, the market pulled back yesterday. But of course, the market now is seemingly trying its best to stay above this level. Okay, so now I'm going to make a statement here, everybody. 39.75 will be a very critical level to watch out for. Okay, very critical level to watch out for, as you can see on the screen right now. Okay. So if the market basically can cross 39.75, I will say that the next target will be very easy to be 40.96 again. Okay, so everybody got it? Yeah, I'm a TA trader. I'm a guy who sees patterns. I want to trade patterns. So I want you to tell your friends that this is so important right now. 39.75. Okay, 39.75. So guess much. If the market touched 39.75 and it doesn't go up, it means that it touches it and then come down, meaning touch and come down, then yes, indeed, the next number will still be 38.55 again. So that means that these 2 days itself, right, it's going to be a very big pivotal point. The market can go both ways, okay? All right, but the thing is this, at least you know what number to watch out for and you can actually test on it. Now, Leslie, as you are saying, right, can we actually, test it on the Dow Jones itself, right? That's a lovely question. And what do you think? Can or cannot? What do you think? Do you think that we can test it on the Dow Jones? Do you think that it work? Do you think that would it be accurate enough for it to work? Let's take a look, yeah? Okay. Okay, let's take a look see whether it works or not, yeah? Okay, clear the screen. And I put the Dow Jones in. So that's the reason why I said to you guys, get your friends in. They will love this thing, okay? So everybody take a look right now. The two numbers that we have for you now is the 90% mark and the 85% mark. 33,258, right? And 31,411, okay? So what you do now? Okay, you take 33,258 plus 31,411, and then after that, divided it by 2. Okay, divide it by 2, and you'll get your magical number. Can you give it to me then instead? Right, let me know. Now, this is the lovely part of it. I'm always giving you all free market views here, and I just want you guys to profit from the market. I don't take a single ounce from you guys. Like other schools, you'll say, oh, okay, you learn some skills from me, some techniques, some calling. You must come to my course, or I pay a cheaper price and stuff like that. I don't do that. I just want you to make money. So when you make money, right, you come from my class instead. That means that I teach you some stuff, you make some money from the market, then after that, you come from my course. Then that will be easier. Okay? All right. Okay, you got it? Okay, the number is, everybody, 32,334. All right, very nice. 32,334. Yeah? Right, ready? Okay, all right, this is number, and we go. Okay, so what are you seeing it right now? Okay, it works the same way. Okay, so when the market loses this point here, you can see that it comes here, right? But once it loses that point immediately, you can see that it just cascades down all the way nicely to the target here, which we talked about is 31,411. And then after that, when it actually stopped there, you can see that it almost instantly rebound to the level we just said, which is that 32,334, right? All right. So by right, on the day itself, right, we should see it going higher, but it didn't. And when it flushed down again, without a doubt, it flushed down all the way again. Nice, man. Very nice. Okay. So obviously now we are seeing a very nice bottoming out experience here. So likelihood there is a chance for the Dow Jones to go back up again to 32,334. Okay, got it? So which means that now, right, there is a chance for the Dow Jones to go up another 300 points from where we are right now. Okay. Now, of course, you will say that that will defeat the purpose of expecting the market go down to 29,534. I say yes, I understand that, but I'm just showing you that if this is going to happen, at least you know why. Okay, you know why. If the market goes up, right, even the fundamental is very bad, and people are all calling for sell and stuff. But at least you know why is it going up to 32,334. Okay. Of course, that is context that if the market actually goes towards that. Okay. But of course, if the market pulls back, then of course it's another thing altogether. Okay. At least I'm just sharing you a number. Got it? All right. If you like this sharing, okay, hit the word like, LIKE right now. At least make me feel that my little effort here itself is good. Now, today's MAO itself is going to be a bit longer than normal, if you're under 1 p.m. So, guys, if you enjoy this MAO and you think that, hey, this guy makes some sense, quickly now get your friends coming, because this is just only a beginning. This is an appetizer, because we're going to have more when we talk about the bull and the bear shortly. All right, this is going to be very, very fun here itself. Right, thank you once again. Appreciate that. Really, really, thank you. Wow, so many of you like. Thank you. Okay, thank you very much. Keep the light coming in. Yep. Okay. All right, so we are done on this side. Let's look at the rest of the content. So the thing is this, we all know that Snap didn't really kill the market in a way. It was because of Walmart and Target. They were the one that lead it first and caused the market to sell off. Snap is just brutal, right? Pure brutal. So of course, would that be causing more downside to go? It is possible. All right, then the thing is this. All right, now the question is, there's some sort of similar pattern going on right now. There's some sort of similar pattern going on right now where people say, hey, look, something very scary. The current movement now is just the NASDAQ meltdown back then in year 2000 to year 2002, whereby the NASDAQ was at 6,000. It came down all the way below 1,000. Remember that? Now, if that is going to happen again, this is going to freak everybody out, right? But is it possible for it to happen again? Well, you must understand something here. Now, first of all, you must understand back then itself, right? The companies like Microsoft, for example, peak at 35 times as compared to 60 times in year 2000. So in short itself, right now the market is more stable, more mature, and there's earnings here, not as crazy as 20 years ago. So to compare compare this apple and orange, it doesn't make sense. Now, of course, it's unlikely for a 75% drop, but you talk about at 10-20%, it is possible, which the NASDAQ has already done that. So again, I want to show it to you now on NASDAQ instead, and you can see the whole picture even clearer. Let's take a look. Now, everybody take a look over here itself, the NASDAQ. Let's take a look. Okay, so you can see that the NASDAQ has already fallen off the hill, all right? Now, this is the NASDAQ at the 100% mark back then in December. And of course, you can see very clearly the NASDAQ came down all the way to the 80% mark, stabilized a little bit, bounced off to 90%, which is like about double the size. And when it came down, it's all right. You see, if this area is a 10% movement, right? So by right, when it go up and come down, it will go down the same distance. So that means that it will go down to at least the 70% mark, right? So of course, how do we calculate, right? The high is 16,779 on the CFD. So you multiply this at 0.7, you will get a number. So what number would you get? Okay, I take my calculator right now. 16,779 multiplied by 0.7, you get a number, and the number is, drum roll, room, chang. Okay, the number is 11,745. Okay, right? So you get a number. Now you press OK. Voila! Look at it. Now you understand why it's all right. The NASDAQ couldn't go down further because it's exactly at the 70% mark right now. So the market is stabling here. It's trying its best to stabilize. So the question comes in, Cal, what if the market really, you see this, right? You see that, right? The market basically came down from the high to the low. Okay, then it bounces off. Okay, so this whole area is 10%. All right. So when the market comes down, right, it will go down usually by 10%, which is a minus 10% extension, right? So now, are we saying that we're going to bottom out soon? Well, I would say that temporary at the moment now, right, the market seemingly is not going to go down much now. Okay, at the time being now, seemingly it's not going to go down much. Okay, so traders, just kindly take note of that. Okay, the market temporary now may not be going down much. Okay, so this is something to take note of that. But there's something that you must also remember, that of course everything happened for a reason. So now you see it right now at the bottom here, you can see the market has tried to hit and then go up, hit and go up, hit and go up, hit and go up, hit and go up, right? But there's a problem here itself, right? The highs are getting lower. So which means that, right, we are talking about like the boy who cried wolf, and every time you cry wolf, there's no wolf, right? So this actually may cause a problem. This may cause a problem, okay? Okay. So what I'm trying to say now is this. Okay, just give me a minute. Something. Okay, that's one. Okay, so what happened is this, okay, if the market really hangs around here, okay, the market most likely is likely going to rebound to this point here, all right, because you can see that every time it tries to recover to the previous high. All right, so we're going to go to 12,500 to begin with for the NASDAQ. Okay, but then if the market cannot stay, there will be another drop. So we can do the maths right now. Everybody take a calculator and let's do the maths together. Okay, so if the market really drop again, okay, meaning if it loses this 11,745 level, if it actually loses this number, the next number, let's do the prediction, shall we? Okay, so 16,779 is the highest level, all-time high, right? So we just take the number down, 16,779 multiply 0.6. That means now if you multiply this 0.6, okay, you get a number again. So what number would that be? Everybody take a look at your calculator now. If you have a calculator, you can do this together with me. Okay, so if you actually look at it, if you take this 16,779, you multiply this by 0.6, you get a very scary number. Okay, so what number will that be? Everybody? Yes, indeed. Lastly, you have got it correct. 10,067. Wow. Okay. So I'm gonna just do a bit of easy to remember this. All right. Just round up of this figure to this figure. Okay. Now 10,068. Because I round it up on purpose. Yeah. On purpose. Just make it easier to remember. Okay. Of course, 67 is absolutely correct. Okay. Let's put a number in. And then after that, we just put a number and we just key in 10,068. All right, and press OK. Right. And after we do this, it's all right. We're going to zoom out the chart. Okay, let's take a look. And then we push it up. Can you see now? Okay. Now, I did not prepare this today. I'm just basically using my TA view right now. I'm just going to do this. If this is the highest point and lowest point, that was what happened back in 2019. I think the lowest point right here, right now. Okay, I can click on it. Okay, and I'm going to pull it up to do a Fibonacci on it, right? And I told you again, I did not prepare this. I just kind of get my mind just coming with the flow, and I click it in. Now you see right now, everybody. Can you see right now? Now you notice that, okay, the 50% mark from the lowest point here, A, the lowest point back in 2019, and B, the highest point. You notice that the numbers here coincide each other. That means that 11,745 and 11,876 is actually at the 50 percentile level. Okay, so now the thing is this: the next number the market could go, if it loses that, it will be going towards a 61.8 level, and that 61 point is 10,483. Okay, so if you would ask me here, right, I can tell you this: 11,745 is a level that I think the market will break. But if it breaks down, I believe that the downside at most would be, okay, would be around here, which means that about 10,483 would be the level, all right, to watch out for bottoming. Of course, can the market really come down to by 60% to 10,068? Well, a lot of analysts are calling for this number and 10,000. I don't think so, but I think this number is much more real. Okay, so my view is this. Okay, now I'm gonna write it down for you. Now the Nasdaq is at what's the price now? 11,875. I believe we can see a bottom around 10,483 by late. Okay, here we go. I just signed my death warrant in a way. All right, so I'm saying this. All right, there is a chance that we will see this soon, that the market itself, right, may actually see a potential bottom around this area, whereby about 10,483. So which means that now very clear, it will be on my checklist. If the Nasdaq goes below 11,745, I will put a buyback order at 10,483. Now that's about 1,300 points. So of course, for people who are actually into options market, they consider doing that. Now I'm pretty sure that with my system and my technique and my little skill, trading options is not going to be too difficult. You just have to really know how to do the how you're going to get involved in it itself. Okay, all right. But the idea, all right. So how many of you think that this number 10,483 will be able to be met? Okay, be met. Sorry. So you think that it will happen? Okay. All right. Can you just key it will happen? All right. If you think that it will happen, just put there IT. Okay. Space WILL space it will happen. HAPPEN. Okay. All right. You think don't happen? Just put the word no. Okay. Easier for you. All right. I want to see how many of you really feel that the Nasdaq is going to go down all the way to 10,483, because of course, think about this. A lot of people say that, Cal, this is ridiculous, down by what, 40, almost 40%. Well, I don't think it's 40%. I think it's about down 37% roughly there. But of course, I'm just sharing with you my view here. Okay, everything is, everything is just a little view of mine. I'm just sharing here. So you think that you're going to happen itself, right? Let me know, okay? Let me know. I'd like to see your views here. Now, once again, like I say, guys, I'm just sharing with you what I think might happen. Everything will let the market decide. Yeah. Okay. Thank you very much. Thank you, guys. Okay. So done deal. All right. So now you go to the alternate market news itself, right? Okay. And then this is something that I'm sharing. Kelly, it can happen, but likely mid-June or mid-June. I'm late June. Yeah. So let's see how it goes. Okay, anyway, I mean, timing is, I'm not going to leave it to myself. Let God decide, yeah? Okay, so now before we go to that, right, let me do a little bit of advertisement for myself first. Okay, guys, okay. This coming Saturday, I have my preview once again. Now, as a trainer, my job is to, share things and then get students to join us. So I'm not going to lie about it. I will need your support, okay? I will need your support here. I want you guys to come on and support me, okay? Come and support me, okay? Now this thing is, why is it good? Because this time I say we're going to talk a lot about this. Okay, we talk about something here wrong. Okay, I'm going to talk about how to use the TWB stars and bomb indicator. All right, it's a new feature that we have, and of course, a lot of students really love it. And recently, I just helped, not 63, it's a typo error here. In fact, 80 students profited from the market at the same time. I actually helped 80 students profited at the same time. All right. So guys, this event is all right. I'll tell you how to use a star so that you can short the market. Very simple, right? I'll teach you how to use a bomb to buy the market. It's as simple as that. Okay. Pretty simple, right? The star and bomb feature doesn't come every day. Of course, when you come to us, it's all right. We must know how to utilize it and make money out of it. That's the most critical part. And of course, right, people really, really make money. You can see that, right? These are the students who have been with me the last 2 weeks, 3 weeks, and they have profited incredible amount of money, and they are very happy with it. And they are like sending me a lot of messages. In fact, I have not cleared up it. There's so many more to go, and I really thank you guys for doing this. Okay, so guys, do come for my preview. So how to join my preview, right? I'm going to give you the link right now. You just have to go to the link and then just join in, okay? And of course, I say once again, guys, if you bring your friends along with you, okay? Bring your friends. So it's a Zoom session, by the way. So no problem. Get the link here itself. You can take a picture, right, if you want to. If not, it's already been available on the comment box. All right, sign up and support me, okay? All right, that's all I'm asking for this 1 minute of advertisement. Okay, thank you very much. Okay, so now let's look into something much more important like this. Now, bond market is counting on the Federal Reserve to do less when it comes to interest rate, right? Obviously, it's all right. The bond market really doesn't want the Fed to do too much because that will kill it. So now that we all know that the yield is coming off recently, as I said earlier, and that released some pressure off the market, and that's why the equity market is going up. But it's still undeniable that we're going to have a 50 basis point coming in, and this is a problem here. If the 50 basis point comes in and it's not going to help the economy, then the problem is going to have another 50 basis point. And if it's going to be another 50 basis point, what will happen again? That will create more and more stress to the equity market. And that is what we're seeing right now, not on the growth counter, but on the NASDAQ. And that's a problem. NASDAQ is killing itself because of that. So the thing is this, a lot of players now are actually watching this. Now, apparently, recently, the Federal Reserve officials are coming about a little bit funny, all right? They are actually now looking at this. Now, this is someone, a YouTuber who do the channel drawing. And she was saying that, right, about 3,008 should be a very important technical level. But 3,006 itself, right, will be the point of no return. Now, I'm back to defer on this. I think that, right, that is where the market will likely hit and rebound a little bit. Because if you actually do a mathematics on this, you will notice that if the NASDAQ go down to 10,400 plus level, the S&P will come down to around this level, and that's where I think the market will bounce. So different people, different view, okay? But the thing is this, undeniable, last 2 days, we see Federal Reserve officials coming out to say something different. Like Baller, when asked if 75 basis point will be necessary at some time to curb soaring, Baller say 50 basis point is a good plan for now. Hey, wait a minute. He was saying 75 basis point. He was the one that leads the 75 basis point camp. And now he said, no need. He said that, right, next year in 2024, we could be lowering the policy rate because we got inflation under control. Wow, what 180 different. Now, it was just basically a few weeks ago, he was calling non-stop regarding about this. Suddenly, he changed his view entirely. Now, of course, when he said that, that causes the stock market to be, whoa, Baller is turning dovish. Okay, great. And the market recovered. But of course, on the other side, Cam, is like, hey, why is he turning this? Is it because he's being notified that the market is actually worse than it is? And if he continue to say all these things itself, the market will actually crack. So this is one view, all right? And both views and different from different people. And of course, we have this. The Atlanta Federal President Raphael Bostic came out and said that, you know what? Let's pause a little bit, okay? I got a baseline view that where I think we should have a pause in September that will make some sense, okay? He's saying that, right, should reassess the situation after the 50 basis point, both in June and July. So he's saying that, right, June, July to have is okay, but after that, let's press stop button. So now we can see that, right, the Fed officials, all of them is like, hey, turning around. These were the hawkish people, and now they turn dovish. And that's the reason why there is a small line that the market will actually recover because of that, whatever they say. Okay, Fred, all the Fed officials are BS, okay? I'm leaving there, yeah? So anyway, the thing is this, all right? This is something incredible, but you cannot deny this. The overnight reverse repo repurchase agreement has hit the all-time high level, $2 trillion. So now the market is bad because the asset market is bad, the crypto market is bad, the equity market is coming off. So practically everything is not so good. The only way and the safest way to put back the money back into the Federal Reserve. That's why you can see now, right? A lot of funds are going back to Federal Reserve hand. Interesting, all right? Now, when the market is tanking itself, right, of course, there's some stocks that are doing very good, and I want to share this with you. Okay, I want to share this with you. One counter is called Merck. All right, you can see that the counter is all going higher despite the market coming off. Very interesting. The other market is Bristol. Bristol also doing pretty good. The market is coming down, but yet it's going up. All right, and the last one will be this, the S&P Healthcare Select Sector, right, SPDR, also doing fine as the market climbs. So all these counters are counters you can consider if you want to. But of course, do note they do have their sell-off time. When the general market is down, they also get sold off. But at least for now, right, when the market is down, but they're going up. So some people are saying that, right, if they can, if let's say it is to continue, then maybe there will be further upside. Yes, indeed, Stephen, 2024 is an election year. So obviously that's the reason why I believe that they're also doing all this because they need to protect their president right now. Yeah, okay. All right, so now let's go into the bull bear fight, okay? Where the bull and the bear is fighting. From this cartoon itself, you can see that, right? The bull is very still optimistic, but the bear is cutting the rally short so that, right, the bull can collapse, okay? So first of all, we have this guy called George Soros. Now, George Soros is a well-famous guy. He is the one who broke the Bank of England in 1992, and he basically informs people that about his big general view. And of course, back then itself, he made $1 billion in 1992. It's a lot of money. And of course, he went to attack the Thai baht, and of course, made a lot of money. Of course, during escapade, he also made a loss in the Hong Kong market, whereby he was, he lost some money. But according to in 0809 Lehman Brothers timing, he also made some money. So in short itself, right, this guy, when he says something, people do watch it. And he's saying that there's a chance of a world global depression. So he feels that, right, the Russia invaded the Ukraine thingy has shaken Europe to its core. And he believes that right now the pandemic, climate change, and of course, nuclear war potential, all these will cause civilization to be challenged. All right. So this is George Soros coming in and telling you, okay, but of course, it's a very general thing. So we're going to skip this and move on. Bill Ackman says that a more aggressive Fed or the market collapse are the only way to stop this inflation. So apparently, Bill Ackman come in and say that, right, we should really do it. Now, Bill Ackman recently made some pretty bad bet on Netflix and lost some money. So of course, again, people say, hey, guy, you were correct once, but after that, that's how you lost money in this Herbalife. You lost money again on this Netflix. So seriously, your words itself is a little bit not able to give credential. But still, Bill Ackman says that, right, this is going to be a big problem if Federal Reserve allows this inflation to continue. So if Federal Reserve don't do this job and it's the only job, then who do it? And of course, the only way is either you do aggressive monetary policy tightening or you just collapse the economy. And I think that, right, it's much easier to collapse the economy than actually do aggressive tightening, because you tighten, it's still going to be a same problem, right? People still continue. But if they collapse, right, it might be a bit easy, but of course, it's going to be very sad to do that. The last one to talk about it before we go to the technical side is definitely Michael Burry. All right, now Michael Burry put this, like a big statement there. Right, he says that 2022 is like watching a plane crash. Now, when I saw this title itself, right, I find it very unnerving, because we all know that recently itself, right, with the Eastern Jet plane coming down, we have a lot of planes going missing. So I don't think that was a right appropriate title, and I think Burry got it, and immediately he deleted it away. Yeah, he deleted it away. Now, before he deleted it away, right, some people already caught it and says that, right, he felt that the current situation now is not so good, and it's not fun, it hurts, and it's not smiling. And he says that right now he still owns about 2,000 over contracts, put contracts on Apple, which is actually a very big sign that he don't expect the market to do well. Because I share with you, right, if Apple is down, a lot of things will be down. Let's look at Apple share right now. Now, Apple share, as you can see, has somehow formalized around this area at 138. I told you, right, at 138, there will be an artificial support on it. And truth be told, you can see my drawing is still there. At 138, it always rebound. But I also tell you at 143, it's a strong resistance, and you can see the market really stopped there at 143. Now, do note the volume has been going down despite the market's holding up. So I'm going to put a bold statement here. I want to tell you this, 129. I believe that Apple is going down towards 129 soon, about again by late June. Okay, here we go. I already again signed myself into a tight corner. I believe that Apple share will continue to go down after 138 to go down 129 by late June. Now at 129, would it be a good buy? Well, until we reach there, then we talk about it, shall we? But you can see at 129 is a very important neckline back then. At 129, you can see that a very important neckline level. So I think that it's quite convenient for the price to come back down. But of course, at 129, it comes back down. That means that all the gains since last July until now has all gone and wasted. Okay, so that's something to take note. Yeah. Okay. All right. So the thing is this now. If you notice this, as I said, he had deleted away. I went to check to double confirm. Yes, indeed, Cassandra. All right, has no more tweets. Yes, no more. He deleted everything as usual again. Now this has been his ongoing little thingy that have non-stop. Yeah, every time he posts and he delete, he posts, he delete. But I've got some people who really following very closely had this thing called the Michael Burry archives, and you can see the archives message over there. So, all right. Okay, 125 is a new Apple halving. Okay. All right. Thank you, Sharif, for sharing with me. Okay, so that is what I'm seeing right now for this. So to me, I'm going to share with you my own personal view, as I told you, right? Now you can take a look here itself. We have a problem, guys. The new one family houses sold in America, one I shared earlier, is coming down, and it's coming down quite fast. The last time when it happened, it was during Lehman crisis time. It went down to about minus 45%. Okay, you can see that there's a low number. Then the thing is that now where we are now, we are doing a pretty okay number, but we're now near to minus 28%. Oh my goodness. So you think about this, right? The economy is nowhere near the Lehman Brothers time, but the internal is having a lot of problem, and now it's now at 28%. We're just margin away from the 45%. So this is the current bad situation now we have in America. And of course, you can see now, right, the traders are getting themselves prepared. Now you can see that the put call ratio now, the put is all getting itself prepared until next month 31st. So that is the reason why I don't feel comfortable after, if the Dow Jones do actually hit the 32,300 level, I think they should sell from there. But if the Dow Jones break the opening price today, then of course you should double sell on it, because the options market do show that, right, the current numbers are not very healthy. Anything above 1.01 is more towards the bear, and below this 90 is meant for the bull. So now the number here is all can be seen is about 1.5, 1.6. That is relatively high. So traders, take note of that. Yeah, these are all little information that I can share with you on the site. All right, now the thing is this, we do know that this thing called the S&P put, right, the level that I told you that the Federal Reserve will come in to support. So the number that I think they are looking at is 35.29. 35.29 is somewhere near here, okay? It's the same level that I was talking about. So the thing is this, do watch out for 35.29. The market may actually do a bottom out, because the Federal Reserve might do a Fed put and try to push the market later on, okay? And last but not least, it's all right, there's a problem here. Everybody take a look. Now you can see that now the list is the Bloomberg US Investment Grade Index, okay? The last time when the index goes up, right, the Federal Reserve came in and support and press it down so the stock market continued to go higher. It happened again back then, but because of the Lehman crisis, the pandemic, it allowed it to go up, and even the Federal Reserve intervened, right? It didn't serve the purpose. But now it came back down again back in June when it's no longer there. The question is whether the funds are taken back or not. All right. So let's say assume that most people give back the funds, then of course this is where you get the interesting part. Apparently now we are not even near at all, but we are there already in terms of, we are not near in terms of economy, but in terms of this price, we are now at 1.47. So now with the Federal Reserve coming to intervene, I'm not too sure they will, but I don't think so they will. To me, is that right? They should let it fall. I think it will. So that's why I feel that, right, we might be able to see something scarier number in the coming time. And this will actually hit the market even stronger. Got it? All right. So all this information you do not find in any mainstream media, because all this is written by, it's found by me, and I only want you guys to benefit from there. This is the most important thing as a trader, as a trainer to you yourself. Okay. All right. So that's why they say this, market stop panicking when central banks start panicking. I think it's a very, very outstanding thingy. So now the thing is that, do we see Federal Reserve panicking now? I don't think so yet. Maybe they're concerned, but it's not that. So that's why the stock market is still moving up. But once the market really, when central bank players are getting panicked and they are very worried, then maybe we're going to see the market near the bottom already. Okay, guys, got the idea now. There's something to share with you. As I say it again, my view is this. I still think that the Dow Jones will go up to 29,563, but I think that the market may have to go up a little bit more first, then to suck in the traders in and then come down. So that's my personal view for today, okay? All right, so let's just look at the charts for today. The bull goes moo, the bear goes grr, and the lemming goes is different this time. Let's go. So first of all, let's look at China market first. China market is kind of sideways today now. It was up initially, but now it has pulled back and it's kind of flat. Now, I still tell you this, it's below the MLP, it's below the MA30. I still think the China market is going to come down here, and the number could be at 12,900 as I share with you, or not. it will go down even lower. Okay, so traders, let's take note of that. 12,900, now it's at 13,166. Okay, all right, let's continue. The next market, it will be the US Dow Jones first to begin with. Okay, on here. Now the US Dow Jones, as you can see on the screen right now, shows that it breaks the RL of the BMB. So logically speaking, it is possible to go to 32,554. All right, it's possible. Well, why do you say ask that, right? Because if it's going to be possible, this is day number 1, this is day number 2, and logically today is day number 3, or tomorrow is day number 4. So as long as the market goes upwards itself, right, there is a possibility for the Dow Jones to actually goes here, and that is 32,554. Okay. Now the thing is this, only if it pulls back below MLP, if it goes below MLP 31,908, then the selling will come. Only if the market goes below that, then the selling will come. Okay, if not, it will not. Just give me a moment. Okay, all right, so watch out for this. Okay, MLP 31,908. Okay, next one, it will be the NASDAQ. And I told you about NASDAQ itself, and rather uncomfortable, but the KSI is green in color. So that means there will be some buying interest. So as long as the market stays above 11,843, the NASDAQ may have to go up to 12,160. Do note, it's an inverse pivot today. Today, the NASDAQ is an inverse pivot. So which means that the market will usually go to the next pivot. So if now we are here, the probability of the market touches here is going to be very high. But after a while later, it will just come back down again. So watch out for this. All right, it's a very therapeutic idea to expect the market to go up here to 12,160, then come down. Okay, so traders take note, yeah. Okay, so that is the NASDAQ. Let's look at the S&P 500. The S&P 500 is a doji directional day, so it's very important. The opening price of today is 39.53. So very clear, all right, if it stays above OP, it's a buy already, right? It's a doji directional day. Today is an up day, right? KSI is also green in color, uptick some more. So all these tells you that the market could be heading higher. The market could be heading higher. Now, how high would it be? Well, logically, the next number will be 40,050. So of course, again, it's 100 points away. Is it possible? It is possible. Let's see how it goes. Okay. All right. I done Hang Seng earlier, right? Okay. So Hang Seng, if it stays up, it will go up to 240, but the target will be still at 20,326. That is the pivot 1 level. Okay, the Nikkei, we talked about it earlier too. The Nikkei is just trying to struggle past pivot 1. It went across the pivot 1 at 26,795. We can let it go up all the way again. Okay. Now DAX is sideways at the moment, but it still has stashness. Okay, so for this guy, for DAX, right, it likely will to stay above the today's MLP. It should be able to go higher because the KSI is a KSI green and it's uptick green. So there should be further upside. Now, crude oil, in my opinion, is going to go up some more. Crude oil now, the doji is I think this is potentially the 4th one or 5th one for the day, for the month. So now the thing is this, it just broke above the pivot 1. It just broke above the pivot 1. So once you broke over pivot 1, we should see it going higher, and the order it will be there. So anyone want to take an order? All right, expect to go to 112.90. All right, it is possible for the crude oil to go 112.90. Yeah, it is possible. Yeah. All right, so they've done all this. Let's look at the gold and silver market. Now, gold and silver. Now, with the dollar still down, that's why the gold went up. But of course, we do expect the dollar to recover soon. So if that's the case, it's all right. The current situation is the boys are all selling, as you can see, buying. Sorry, the boys are all buying, but the market is not really moving, right? So that's another telltale sign that market may not be really going much higher. So the thing is this above period 1. So that means the upside could be as much as 1880, right? Okay, the downside will be 1855. Okay, so very, very simple. If the gold price goes up because of the KSI green and everything, right, it should be able to go up to 1880. Now, if it goes down below OP, it's all right. Be careful of 1855. If it breaks down, right, there will be some selling. Okay, there will be some selling coming in. All right, so now that is the gold, silver. Now silver is pushing up a little bit because of the dollar. So silver is going to go up. It's going to go up to $22.27. Now my target for silver should be here, and that is $22.93. Okay, all right. Now of course the ultimate target will be the MA, but I don't think you hit today, so I'm not going to talk about it. Okay. All right, last two before we go for lunch. Quickly now, Ethereum. Now, Ethereum, as you can see, is trying to find its base. Now, I did say that there will be a base around this area, and I do suspect it will go down, right? But now I just saw my KSI turning green, and the blue bar still continue to retrace. So there is a chance that Ethereum is going to go up here to 2169. At least, you know, not the jersey and stuff like that. Okay, going up to 2169. All right, so watch out for that. And last but not least is Bitcoin. Now, Bitcoin is also trying its best to stabilize around the area. You can see over here. Now, the KSI is red as an uptick rate. Although the blue bars are expanding upwards, right, I still think that there is a upside towards here a little bit more, towards 31,146. So once you get it done, okay, then later on, we just expect it to come down all the way to the 20% level. All right, and that will be the 27,367. Okay, all right, so that will be the view of Bitcoin and the upside and downside. So overall, I would say for today, my view is this: the market for the US market will likely still go up a little bit more, especially during the DAX session. Okay, we've been seeing that it has been happening like this. Every time when it's DAX itself, it will push up a bit higher. But I'll just gently remind you guys, we have a KSI that's great and it's uptick red. So the market cannot lose OP, and the OP today is 31,996. So if the market loses below OP itself, right, there will be selling, and the first selling will come down will be the MLP level, and then after that it will be this level, 31,766. Okay, all right, that will be all for today. Thank you very much for listening to my MAO. Do note again, all the boys are calling for sell, but other people calling for buying. So I'm not too sure who to believe with, but of course, just make sure you do your trading and make your risk assessment. You should be able to do well. Okay, this is Cal signing off. Bye-bye. I'll see you on Friday.